Hello, everybody out there. We are so excited to chat with you today. Just a real quick intro, and then we'll dig in. My name is Donna Novitsky. I am an entrepreneur, CEO, CMO, but I started my career as a product manager at Sun Microsystems, and that's basically the foundation for everything. I've been working in startup companies. I've been a partner in a venture capital firm. I'm also on a couple of boards, and I've been teaching here at Stanford for almost 20 years now.
And I am Laura Marino. I have been leading products across different size companies and different industries for over 20 or 25 years. I'm currently a general manager and VP of product at Nubank. That's the largest fintech company in Latin America. But as I said, I've been chief of product officer and product leader in companies across industries, from speech recognition to legal technology, fintech. I'm also a board member, and I have been an instructor at Stanford for many years now as well. And we're just thrilled to be here and share a little bit of the experience that we've accumulated together jointly for over 50 years. So with that, I wanted to start with the realization, how you approach strategy, the challenges that you face as a product leader. And we know that most of you joining us are either current product leaders or aspiring product leaders. So your strategy will really depend on the type of product. Is it a business to consumer, business to business? Is it a marketplace? Is it a platform? It will depend on the type of industry. Are you in a highly regulated industry, fintech, health tech? And it also will depend on the maturity stage of the company. Today, we're going to focus on that last point and how you need to be thinking about your strategy as you go through the various stages of maturity in the company. So let's talk first about those stages of maturity. Companies typically go through three stages. An early stage, the early startup stage, where the company is trying to get to product market fit, finding a product that serves a need in the market. And what you have is a team that's doing all kinds of things just to get something out and test it and prove that it has value. After that, after you've gotten to product market fit, you get into the scale-up stage. And this is a very different stage. This is all about scaling, being able to prove that once you got product market fit, that you now can really grow within that segment that wants your product. And then you get to mature companies. Mature companies are typically companies that might already have gotten through a liquidity event, an IPO, a big merger. And these are companies that are operating with a understood business model, and they have more of a cadence of operation. And what their challenge is how to continue to grow that big company while also maintaining innovation. So with that, what we're going to focus on today is Donna is going to talk first about what are the mistakes that you need to avoid when breathing life into your first product in that early stage, and how to accelerate this time to volume during that early stage and avoiding mistakes of big company thought process. Then I'll talk about that scale-up stage and what are the transitions that companies that are past that early stage need to make in order to succeed when they are in scale-up. And we'll talk very specifically about the challenges as product leaders during that high growth stage. And then Donna will come back and talk about the mature stage and specifically how to align product strategy with the company strategy when you're already in a mature company. So with that, Donna, I'm handing it to you.
All right. So yeah, as Laura said, the early stage is characterized by a number of different things, what we're describing here. So, and this is where I've spent the majority of my career, wearing many hats. Sometimes, you know, your CEO, maybe your CFO, maybe doing a lot of the product work. You're also at a stage where you have to conserve cash because you probably don't even know your revenue model yet. You have some hypotheses about it, but you are in process of proving all that. We're going to talk about what it takes to get those first early adopter customers in a market that may or may not even exist. You're trying to figure out what's your MVP, your minimum viable product, how quickly can you get that to market and into the hands of paying customers. Usually this is all do it yourself, no partners yet in play, and the competition may not even be fully clear yet. So that's what we're defining as the early stage. That's the earliest of early stage. And in this stage, you find that your product strategy basically equals your company strategy. If you're trying to do more than one thing, if you're trying to have multiple product lines at the same time at launch, you're trying to do too much. This is in a stage where you need to be super focused on getting those early products to market and acquiring your first customers. So we're going to talk about how you do that. What I like to say is the product and the market development processes are strategic and iterative, and they have to be done simultaneously. That might be obvious, but what we find is a lot of people in early stage customers, product leaders who are bringing first early products to market may be thinking all about the product and not thinking about the market sufficiently. So we like to say it takes two to tango. So one person needs to be thinking about follow my lead, I'm building the product. Your co-founders and partners in early stage ventures are going to be saying follow my lead, I'm finding the customers and the market. They are both correct. You need to be working together to do both of these at the same time. But it's really hard. Building a new market is hard. I'm sure some of you have tried to do this, gotten started doing this, but you realized, wow, this is not like working in the big companies. We don't have customers. We don't have a product yet. We don't have budget yet. We maybe haven't even raised any type of funding and are bootstrapping this. It's not clear that people understand the problem that we're solving, and nobody knows who we are. So I like to think of this as with some parallels to a movie called Field of Dreams, where in that movie, the statement is, if we build it, they will come. And that only works in the movies, I'm here to tell you. That does not work in real life. It does not work when you're bringing new products to market. You have to be building the market at the same time as the product. You can't just build it and throw it out there and expect people to buy it. So how do you do that, this difficult challenge? You have to use what you have in order to get what you don't have yet. And what you have is a team of superstars. There's yourself and your early stage partners that are getting this business going. You have a game-changing product coming to life. And in that, you have prototypes, you have PowerPoint slides, you have demos, and those things are all going to help you get to market. And never underestimate the power of your vision. You have a strong, compelling vision of where you're going, why the world needs what you're doing. And that's exciting. That's exciting to customers. It's exciting to yourself and your team. And the more you can convey that excitement, the more successful you're going to be in getting your company off the ground. So a question for you is, what do customers care about? And a lot of product leaders, I know, I'd like you all just be thinking about, what is it that you think customers care about? Well, they care about price, they care about functionality, they care about quality, they care about, does this product solve the problem or realize the opportunity that I have? Those are usually the answers I get when I ask this question, but there is a much simpler answer. The simpler answer is that customers care about themselves. And so if you get out of your own heads and put yourself into the head of your customers, you realize that those customers or those prospective customers, they're thinking about, how do I look good to my boss? How do I look good to my friends? How is this product going to affect my life? They're not thinking about what are the features and functions of the product. So this changes the whole game for early stage customers. It means that what you need to do with these early stage customer partners is establish a basis of trust. Early stage, bringing new companies to market is all about relationship building. And the way that you build relationships with your initial early stage customers is that you demonstrate that you comprehend their problem or the opportunity, that you are competent and you have the skills to solve this problem, and that you genuinely care about their success. If you establish those three things, then you will be establishing trust with your potential customers, which is what allows them to take the leap to buy a product that's brand new coming to market. So you need to put yourself in your customers' shoes in order to do this, or potential customers. And so what we're going to do in order to do that is leverage what we have to get what we need. So we're going to market the company, not just the product, because the product, by definition, does not fully exist yet. This is an exploration period. So you need to cast a wide net. You need to be talking to a number of different market segments, different levels of people in organizations. And you need to be asking a lot of questions, taking a lot of notes, listening to their answers, and really exploring and understanding the market. To do this, we're going to use something that I call the player. The player is what you are marketing in lieu of having a product. And so we're going to talk some more about that in a couple of slides. You're going to then, once you decide where the strategic market opportunities are, you're going to lock your customers in step by step with your development process. Choose them wisely and invest heavily in those bets to make sure that they become great reference customers. So I call this the Tango. On the left side here, you see a fairly simplified product development cycle. You start out with some ideas on a whiteboard, you go to debugging and beta testing that product, you eventually have a production ready product, that product goes live, and you roll it out globally. Most product managers and product leaders are very familiar with this. What they haven't necessarily thought about is the market development cycle, which moves in tandem with the product development cycle. So while you're having your whiteboard discussions, you're having exploratory customer meetings. While you're doing your debugging and beta, you're having your product feedback sessions with customers and building credibility. From there, you get to paying customers. And you do need customers to have spent money on your products initially, not just testing it to do you a favor for free, because customers who haven't paid do not become great references. And you need great references in order to establish a market. So this is fairly intuitive and obvious when you see it all laid out like this. So we'll talk about a couple of common mistakes that are made. One is, and I have been in, depending on how you count them, my current company is my third or my 19th startup. So I have had opportunities to make all these mistakes and more in all those different companies. So one of the ones that we see most often is starting to sell too late, and the other one is overemphasis on the product. So we're going to drill down on those. The mistake in starting too late is product managers say, great, I've got my funding, or I'm bootstrapping this, let's go build the vision. Let's go build this amazing, wonderful idea that we have. What's wrong with that is they build too much stuff, they build the wrong stuff, and as a consequence of that, they deliver too late. So what you're trying to do in early stage is identify your minimum viable product, or MVP, which I'm sure many of you have heard about. But that's not sufficient. That is necessary, but not sufficient. You need to also learn how to sell and seek out your early customer partners who are going to eventually become your initial reference customers. So to do that, I recommend that you meet with at least 30 prospective customers over a time period of 3 months. And these are some of the questions that you want to ask. Notice that the questions really cover two different domains. One is about the functionality of the product, which is where is your pain? What are you doing to address it now? What are your competitors offering and promising? And then the other domain is how do decisions get made? It could be an individual deciding to download your app, or it could be an enterprise deciding to allocate budget to purchase your product. So how are they organized? How are they making those decisions? Who has the budget? And one of the biggest questions is what are their priorities? My favorite question overall to ask while doing this market research is tell me all the reasons you would not buy this product, because in the end, that's the thing you really want to know. So the second big area is how to accelerate time to volume by avoiding the big company thought process. So I started out my career as a product manager at Sun Microsystems. In a period of 3 years, I launched 19 different data communication products. So I went through this over and over and over again. And our approach at Sun back in the day was a very tactical process. As a product manager, we identified customers who would do us the favor of testing our new products before they came out. They would identify features, quality issues, etc. We, with engineering, would decide, are we going to make these changes? Are we going to fix these bugs? Or can we get this to market as is? The company in parallel was learning how to deliver it, how to sell it, how to support it, how to market it, all the rest of the things that go around bringing products to market. The customers who were our early partners testing, they may buy the product, but they may not. Honestly, we weren't focusing on that at all. The product was finalized and launched. So the problem is in early stage, there are that big company process is doing insufficient strategic customer and market qualification up front, and we were not focused on referenceability. What you have to get right in startups is choose your first customers in the right market, and 80% of them need to actually pay money for the product. Maybe not the full amount, but at least something. The reason is this early product testing is strategic, because when you're in a big company, that company already has a market, a reputation, and existing customer relationships, but startups do not. So your first partners in testing your product are going to be the true judge. Do they buy it? Do they use it? Do they recommend it to their friends? And are they in the right market segment to begin with? It's going to be a big opportunity for you. And if they are not, you're back to ground zero in market development. And the Tango would look something like this. You're in a market that's too small, or maybe you don't even get there. So what you need to do is avoid choosing the wrong customers in your beta testing cycles. A wrong customer is a customer in the wrong market. It's not large with repeatable sales. Their priorities are not mainstream. You're going to end up allocating scarce engineering resources to unique development that doesn't scale. And your customer has no intention of buying when the testing is complete, which is an opportunity cost to you because they're not going to be a reference for you. Bottom line is a customer who is not referenceable. Those customers will establish your market, your reputation, whether you like it or not. So your three goals are feedback to product development, selecting your strategic customers, and establishing a base of die-hard loyal customers. Those are the goals of early stage product testing. And so life changes when you move to scale up, and Laura is going to talk about that.
Yes. So when you move from that early stage to scale up, essentially you're transitioning to a stage of very rapid growth, and things are very different. And just so that you're aware, for those companies that successfully end the early stage, 60% die in the scale-up stage. And this is from some analysts here in Silicon Valley that have done the analysis. And the reason is that scaling up is a very different ballgame than being in the early stage and trying to find this product market fit for the first time. So to succeed, once the company's past that first early stage, startups really need to embrace changes. And the first question is, why do they need to change? Why is a transition needed in the first place? Well, to explain that, what we want to look at is, what is the strategy? How do you operate in the early stage? In the early stage, and some of this was covered by Donna, you're really needing to move fast and iterate. You don't yet have product market fit. You need to be figuring out how you build this market, how you build the product for that market. You have a team that's doing whatever it takes in order to get the successful product out, in order to secure those unique customers who are going to be your partners. Communication in the company is very informal. It's a small team. Everybody sort of knows what you're going after. And there's knowledge that is distributed very easily. Even the most sophisticated CEO will be sitting with their team and sharing a lot of the knowledge. The engineer who started the product will be sharing the knowledge. And that is great, but the problem is that once you start growing, once the company grows to hundreds or more of employees, and you grow to hundreds of thousands of customers, that doesn't scale. And what you get is total chaos. So this is why companies, when they get into this high growth stage, need to make several transitions in order to succeed. And there are actually 5 key transitions that companies need to go through. One is moving from having this group of people who know everything to embedding that knowledge in processes. The other thing is moving from relationships, maybe the CEO was the one selling every customer, to building a brand that's recognized in the market. Moving from the early product that got to product market fit to a scalable product. Then moving from owning everything to leveraging partnerships. And finally, moving from being very opportunistic to starting to think very strategically about how you're going to scale. All of those 5 transitions require that the product leaders be very directly involved. But because we don't have time today to go through all of those, I'm just going to focus on talking about transitioning from early product to scalable product. And notice that I'm not talking about transitioning from MVP to a scalable product. Because for you to have entered the high growth stage, you're way past MVP. You now have a product that actually has proven to be successful in a segment of the market. And now what you really need to do is grow that as fast as you can. So what are the challenges that you as a product leader are going to be facing when you're moving from this early product to a scalable product? And to understand that, let's go back to think, how do you develop product when you're in that early stage? Again, you have to move fast and iterate. You don't know what's going to stick. You don't know yet what is going to be important for your target customers. Mm-hmm. So for you, testing and iterating is absolutely critical. And the goal is to build features and functionality that's visible to those target customers. There is no time to be thinking about scalable architecture or about tools for implementation, because really what you want is to have your engineering team be producing as much functionality as quickly as possible. And in fact, engineers are even rewarded for coming up with shortcuts. How quickly can they get something out so that you can show it to your customers? And then you have to do whatever it takes to secure those early adopters, Donna talked about how critical it is to have those initial customers who are going to be your references, who are going to be your partners in building the product. So you are going to be willing to do unique things to secure those adopters. So if your product were a building, by the end of this early stage, your building would probably look something like this. It would have a bunch of things that you built for specific customers. And even if you built them in a way that could be used by others, you probably know that only one or two customers are ever going to use it. But you were willing to do that because you had to secure those customers. And then your building will likely have a whole bunch of areas that were built very poorly. Those were the shortcuts and hacks that engineering was actually encouraged to do so that you could get something out quickly. And your foundation is probably going to be very shaky because, again, there was no time or focus on building something that would scale to a large number of customers. This is what we typically think of as technical debt. Now, these are problems that exist or start in that early stage. But the problem is that as you start scaling, if you don't pay attention and start addressing those things, you're going to be in a lot of hurt. So let's first start talking about customer-specific functionality and how you handle that. Now, customer-specific functionality is primarily a problem if you're in B2B, but even if you're in B2C and you have been kind of now hanging on to this initial customers that you had, and they are sort of dictating what you should do next, you will be having the same types of problems. So what is the cost of customer-specific functionality? Again, during the early stage, those early customers are absolutely critical. You do need to secure them. And it is okay for you as a product leader to accept to do stuff for them that you know may not be important for the rest of the market. That's okay. You need to do that in the early stage. However, if you don't change and you don't change that behavior and you start growing, what's going to happen is those early customers will take over your roadmap. And the list of things that they will want you to do will start being so long that you are going to be at risk of missing building what the market actually needs. So you need to start reining in those very powerful early customers. And that is not easy. But I have a couple of tips that have worked well for me in various companies. The first thing is make sure that you are communicating proactively to those customers what you're building and why. If you don't, those customers will assume that your roadmap is this blank sheet of paper waiting for them to tell you what to do. But if you go proactively and share with them, this is what we're seeing, these are the trends we're seeing, and this is why we're focusing, at a minimum, they will get the message that your roadmap is not dictated just by them. The second tip, and this one actually worked really well, is leverage customer councils. One of the companies where I was a product leader, we sold software for the legal industry, and our main customers, our target customers, were the 1,000 largest law firms in the US, UK, Canada, and Australia. And as you can imagine, those large law firms, each of one thought that they were the most important customer that we had. And each of one wanted to dictate what we wanted. So what we found very helpful was we would bring them in groups together, and within law firms, they have a hierarchy. So we could identify which ones considered themselves peers. And we would bring group of peers together. We would ask them sort of what were the trends that they were seeing. We would share with them what we were doing. And then we would let them sort of talk to each other. And what was very interesting was to see a customer that had been pounding their fist saying, you have to build this, you have to build this, it's very important, realize that none of their peers cared about that. So that actually also helped them realize that we were not building a product for any one of them individually. We were building a product to serve them as the leaders in the legal industry. But even with those strategies, sometimes you just need to be prepared to say no. And what it means to be prepared to say no is you need to be very clear about the trade-offs that you would need to do in order to accommodate a unique requirement of one of those customers. And you need to make sure that you communicate that to your CEO, because you can be sure that those big initial customers have a direct line to the CEO. And if you say no to them, they probably are going to go straight to the CEO. So you need to be incredibly clear with your CEO and your executives. What are the trade-offs? If we say yes to this customer that has been a very important customer, and these are all the things that are not going to get done. These are all the things that we had promised to sales that are not going to get done. And when you're very clear, it's a lot easier for your executive team to be supportive. And it may be even easier to convince the customer. Now, there are extreme cases, and I had to deal with that, of eventually you may need to fire a customer if that customer is actually forcing you to do something. Hopefully you don't need to get into that, and at some point I'll share that story. I've shared it before. But again, if you are not able to say no, the cost is that you will be diverting your unique engineering resources to build something that's not going to serve the market you're going after, and that is not going to allow you to scale. So let's talk about the next one, technical debt. Every startup has technical debt when they exit their initial stage. Because if they had tried to build everything totally scalable and with the highest quality from the very beginning, they probably would have run out of money before they got their first product out. So it's absolutely natural that there be technical debt when you start the scale-up stage. But you need to realize that now that you're in scale-up mode, you need to start addressing that. Because technical debt in its, let's say, less dangerous form will start slowing you down. Building stuff on top of poorly written code gets hard. So your engineering team is going to start slowing down, trying to do more things on top of stuff that was not good quality. But in its more pernicious mode, technical debt will start appearing in front of the customers. Things start crashing, things don't scale, latency of the website gets further. So that's when it gets very dangerous, because your customers will start noticing it. So how to address it? And what I call it is face reality. The first thing you need to understand is that the way that the engineering team was allocated in the early stage is not the same way in which it can be allocated in the later stage. In the early stage, when you're just starting with the product, most of the bandwidth of engineering is going to build new functionality. And there's a little bit that is going to go to maintenance and implementation support. If you're building B2B software, the software, when you sell it to a customer, needs to be implemented so that it ties into the business processes and the other systems that the customer has. And typically engineering in the early stage will get involved in that. But what happens is that if you believe that that type of allocation can continue, the reality is as you start adding new customers, as you start adding more functionality, you now need more engineering bandwidth for maintenance, because there are more pieces of functionality to maintain and evolve. There's no one feature that's done in version 1. When you launch new functionality, you're going to have to iterate on it. You are now going to have this technical debt that starts going to be showing up. And the latency may start increasing if you now have a large volume of customers doing transactions. The escalations will increase. If things start breaking up, now engineering is going to have to dedicate more time to address bugs. And if you have a complex B2B software, you're going to have your engineering team start building those tools that would allow somebody else, like a professional services team, to do the implementations. And I do have a story. When I joined one of my companies that was in the talent acquisition space, I knew that they had let the previous VP of product go. And when I started to understand what had been the issues, what I was told is that the VP of product kept promising things, but never delivering. And as I started drilling deeper, what I found was that product and engineering were still operating with the mindset that they were living in the left side of the screen. And they would promise, they promised they were going to deliver all this functionality. But the reality is that by then the company had already secured a lot of customers, some very big. And what was happening was engineering was being pulled into fixing things, into implementing and launching those new customers, because they were the only ones who could go into the database and set it up for the new customer. So the reality is that they did not have the bandwidth to deliver all the functionality that they were promising, but they had not realized that. So it's really important for you as the product leader to see that you need to transition. And unless you get a lot of additional engineers, you need to start setting the expectations with sales and with your executive team that you're not going to be delivering new functionality at the same rate as you were before, and that instead you're going to have to be dedicating some of your precious resources in engineering to maintenance and to paying technical debt and to making the architecture scalable. So how do you do that? The tips for doing that, the first thing is partner closely with engineering to really understand which ones are the areas of the product and the code that need attention most urgently. Now, engineering will probably tell you they want to re-architect everything. They will want to stop sales for 6 months, no new features. They just want to re-architect everything. And of course, that's not possible. But you can partner with them to really get them to tell you, like, if we double the number of customers, what's going to break first? Which ones are the areas of the code that engineers are always afraid of touching and they don't want to evolve because it's so complex and it's a really poor code? Once you understand which ones are those priority areas, then what you need to do is prioritize work on that as part of your roadmap. I have seen companies where there's this belief that engineering has their own roadmap and then there's a product roadmap. It should never be that case. Engineering is one group, and you as the product leader should really know where they are dedicating their time. But you also need to be the one saying explicitly that you are dedicating part of that bandwidth to improving the architecture, to paying technical debt. And it's your responsibility to sell that to your executives and to the sales team. You have to be the one explaining to them why this is a good investment, because customers expect performance, customers expect security. So it should not be engineering having to explain to sales why this is important. You should be the one explaining it to them and making them realize that this is actually going to help the customers. And finally, communicate proactively. Again, if you're not telling your leadership, your sales team, your marketing team why you are putting engineers in that priority, they will be complaining that you're not delivering as much as before. So really explaining why this is important is very critical. So those were the key things that I wanted to highlight. Again, there's a lot more things that you need to be thinking about when you're transitioning from early stage to the scale-up stage, but we'll leave those for the next opportunity. And with that, Donna.
Back to me. Thank you, Laura. That was amazing. I love the house. That's my favorite part. So thank you for that. Now we're going to move on to the mature stage. And this section, we're going to talk about defining the characteristics of a mature company here on this slide. So my earlier slide, we talked about the team wearing many hats. At this stage, you're specialized, you have experts most of the functional bases are covered, if not all of them. And so it's a very different ballgame than when you're in early stage mode. The company's been selling for a while, you have budgets, you have plans, you have cash, whereas in startups and even early stage companies can be very cash constrained. You have customers already, you have a reputation in the market, and now you're probably looking to expand to new geographies. You're probably past the IPO stage or the M&A stage. You may be actually looking to be the one acquiring new companies at this stage, bringing in new product lines, expanding your partnerships so that you can grow faster. And the competition in general is very well understood, and you know how you're differentiating yourself. So the big challenge here is, how do we maintain our market leadership and continue innovating with a very mature market and without kind of killing what's driving all the revenue in the company? So first of all, unlike our early stage company, product strategy does not equal company strategy. In fact, product strategy is just a part of a much bigger strategy. In fact, your company strategy may not even be the whole thing. There may be a corporate strategy above that that's dealing with things like diversification, M&A, questions that might be 1 or 2 levels above product leadership level folks. So you are part of a much bigger picture. What's critical at this stage is that your product strategy aligns with your company strategy. So let's talk about what that means. So there are really 3 things to consider about your overall company strategy. One is, what is your competitive domain? So the domain, your domain is your target market and the existing competitors in that market. So for example, you might be in the retail banking space. You might be in luxury automotive space. You might be in the smartphone business. That is your competitive domain. It's an area that it's an existing market. It's well defined. There are many competitors in general in that market. So given that, part 2, what is your competitive advantage? Think of your competitive advantage as your superpowers. What is it that your company is really good at? It could be that you have amazing brand loyalty. It could be that you have amazing supplier relationships, or it could be that you have incredible IP. Those are examples of superpower competitive advantages, and you as a product leader should be very familiar with what those are. Third, it is said that a vision without strategy, without execution, is just a hallucination. So that brings us to the third leg of this stool, your execution capabilities. So as a company, what are you really good at it? Is it that you have an incredible sales organization? You're able to bring new products in quickly and sell them to existing customers. That's the way that Cisco expanded so fast in the 90s and became the market leader in networking equipment. It could be supplier relationships. It could be customer data management. Think about what is your company uniquely capable at executing on. And then you need to make sure that your product strategy is consistent with these 3 things. So we like to lay it out like this. On the top, you see the company strategy, which is built on what we just talked about, your competitive advantages and your execution capabilities. But under that, there's a whole other series of strategies. You've got marketing strategy, operations, product, finance, HR, a whole bunch more of them. So the question is, what are you really good at in marketing? So in marketing, you may be really good at things like promotions or distribution strategy. What exists in the company and how can you as a product leader leverage those assets in marketing? In operations, you may have a superpower in terms of your ability to do high quality manufacturing or fast turn manufacturing or responsive manufacturing. So what is it there in operations that your company is particularly good at? And that brings us to product strategy. There are a number of different types of product strategies that you can think about. So to give you some examples of those, one is you could have a product strategy that's centered on innovation and continuous improvement. This is common for companies in the tech space, something like Apple or Samsung, focused on continually innovating and bringing out new products. You could have a product strategy based on market leadership and defense, which would be something like LVMH, where they've been market leaders forever and they want to maintain that leadership position. You could also have a product strategy around efficiency and optimization, where you're optimizing processes for efficiency and cost. Think Amazon, Walmart, companies that are able to just efficiently roll new things out into a huge operation base. You could have a strategy around diversification. In this case, think about Coca-Cola, where they started out with Coca-Cola, then they brought in Diet Coke, and then they brought in health drinks, and they brought in energy drinks, and they brought in waters, and all different diversified drinks, but all in the area that they started in. And finally, another one is sustainability and long-term planning. So if you look at an example of this would be the auto industry, where auto companies are now developing EVs, electronic vehicles, because they can see the writing on the wall that at some point in the future, they are going to need to evolve to new technologies, new platforms in order to sustain their growth. So those are some ideas of different, or some examples of different types of product strategy that you can consider. Your company may have other areas or combinations of those areas. So then we go back to our hierarchy of our company's overall assets, and we take our product strategy here that we've just identified and saying, now, are we aligning with the rest of the company? Are we, for example, say we are a fashion company, a high-end fashion company like LVMH or Gucci or Hermes. That company has certain capabilities and certain competitive advantages. Their marketing strategy is reaching out to high-end customers and maintaining that customer loyalty. Their operations strategy is all about premium product, premium content, and rolling out for their customers that, and that aligns with their product strategy. If you were the product leader at LVMH or Gucci and you decide you want to bring out something like quick turn, fast fashion, like, for example, Zara or one of the quick fashion providers, you're not going to see alignment with the existing marketing strategy or operations strategy in the company. So those are the things that you need to be thinking about, even as you're considering evolving and working with your counterparts in marketing, operations, and the rest of the company. So if you do this right, you will end up with alignment of strategy at every level, your product with your company capabilities and ability to execute, and you will look like a high performance Formula One racing team. And where when that car pulls into the pit crew, that crew is a well-oiled machine. Everybody knows exactly what they should be doing. They know when to do their part. They know when to get out of the way of their colleagues. And product strategy is a key piece of that execution. So that's just a little taste of some of our ideas and our content for early stage, scale up stage, mature stage. We wanted to summarize and give you a few minutes for Q&A. Love to hear your questions. So what we talked about in the early stage was some mistakes to avoid when you're breathing life into your first products. Make sure that you're building your market while you're building your product. It takes two to tango. Second, we talked about accelerating time to volume by avoiding big company thought processes in your early testing cycles. Make sure that those early testing customers will buy and be great reference customers for you so that you can get more customers like them. Third, Laura talked about some of the transitions startups must embrace to scale, and that early stage strategies just don't scale. So you have to be thinking about that. And she gave you a lot of great tips for how to make those transitions. And some of the product challenges to scaling, about how to rein in those early customers and address your technical debt. And finally, we talked about mature companies and how they need to align product strategy with their company strategy and make sure that that is consistent with the operations and execution capabilities of the overall organization. And so with that, at the end of the day, this is just a note of inspiration for all the product managers, product leaders, aspiring product leaders out there. At the end of the day, your job isn't just to get the requirements right. Your job is to change the world, and it takes a lot of coordination among a lot of people within your company, outside of your company. And we're super excited to be able to offer our insights from many, many years as product leaders. And now happy to take some questions.
Awesome. Thanks so much, Laura and Donna. So as a reminder, so there's the Q&A box. Please feel free to submit your questions. And just because I've been seeing this a lot, that yes, this webinar is recorded, and we'll share the recording link in 1 to 2 weeks. So first question from Vaibhav Gupta. How is the rise of generative AI going to affect the product strategy for companies, for matured companies, especially in the tech industry?
Well, I'll take a shot.
I can take a stab at that, and Laura, you can add to that. It's going to become fundamental. So we already see that generative AI is having an effect on pretty much every aspect of every company, just like we talked about. There's generative AI in marketing, in operations, in product strategy. It needs to be considered across the board. Laura, do you have some other thoughts?
Yeah, I would say every company right now is looking at how to use generative AI. And the question is really, what are you trying to achieve? So on one hand, for efficiency, it's huge, and companies need to look at that. When you're thinking about your product, right, I think that the main point is, what can you provide to your customers that's fundamentally different because you're leveraging AI? There are some cases where AI may not make a big difference in the value to your customer. So I think that a lot is really go back to basics and look at what are you trying, what's the value that you want to provide to your customer, and how do you think AI can actually allow you to do a much better job or a fundamentally different job than what is available today.
Great, thanks so much. Okay, next question from Xiaoting Lu. So when working as a product manager in a consultancy company or a product manager for an internal product, seems similar to an early age startup, but not 100%. Do you have any suggestions or tips on product strategy in these contexts?
I did a lot of work with startup companies where when I was in the venture world, where my role was basically, here's $3 million, and Donna, she'll help you get started and help them with their initial product strategy and go-to-market strategy. And what was really important there is to really figure out where are we going to focus. To be successful as an early stage company or a bigger company that's bringing something new to life, you really need to know exactly who you're selling to and what it is that is critical for them to achieve the, as Jeffrey Moore would say, compelling reason to buy, to achieve the results that they're looking for. So what I found as a consultant is we put a lot of work into identifying that, but then we also put a lot of work into making sure that everybody was involved in those decisions, and that as it was handed off to, for me, it was usually my replacement in the company as I moved on to the next thing, making sure that that person was, to the extent possible, a part of that process so they could continue running with the ball. So That would be my 2 cents on that.
So I don't know if I interpreted the question slightly differently, but if you are a product person in charge of internal products, your target customers are the rest of the employees in a company. And that can be challenging, right? Because it's not, you may not be treated the same way, but I would say for internal products, you need to go through the same processes, really understand what you're trying to solve for, really talk to all of those internal customers you're going to have. On the consulting side, and that one is probably the one that I wasn't completely clear what it was, but what I think is I've seen consulting organizations trying to sort of build product for their customers. What is challenging in that case is that typically what you have is you're building product for one customer. And that's more like developing a product that's tailor-made for one customer versus building product for an entire market. So that is actually a kind of a different situation. Because if you're not serving an entire market but one specific customer, that is kind of a different one. But
thanks. Okay, next question from Flavia. Is there, if any, a best moment to look for external funding?
Donna, I'll let you start because
I missed is there a best moment? What did you say, Liz?
Yeah, is there a best moment to look for external funding?
Well, yeah, I actually first recommend if you can bootstrap it and get it going as far as possible, the more momentum you have, the higher your leverage in raising money. So I would advise you to get as far as you can bootstrapping before you would go out to raise cash, because that's what's going to allow you to keep the biggest share of the company for yourself. You will be dealing from a position of power. What I like to think of in general is that cash is a commodity. Successful entrepreneurs are not commodities. That is your superpower. The fact that you've already got your business off the ground is going to give you a lot more leverage in raising funds.
And what I would add, because I've been in companies kind of going through the getting funding for B and C rounds and so on, if you start taking VC funding, it's great, but the expectations are very high. And if you remember, I was saying that 60% of companies fail in between exiting the early stage and going through the scale up. Partly is because they are not able to grow as fast as they need for securing the next round of funding. So the expectations when you have investors is that you and your company are really going to grow fast and build a big business. And when you're not showing those results and you need to go for funding again, it will be hard. So I agree that if you can postpone the funding until you already have some traction, you're showing some growth and so on, you are going to be in much better shape than if you go for funding very early on, you get some nice VC funding, but then the pressure is going to be really immense.
I have one more thing to add because Laura reminded me of something. Thanks, Laura. As you're thinking about raising funds, you need to equally be thinking about what exactly are we going to get done with this money. And you are basically making a commitment to your investors. These are the things we're going to do. So for instance, you're raising Series A, we're going to go out and we're going to get X number of customers and bring in Y amount of revenue. And then you focus on accomplishing that objective. And when you raise the next round of money, you say, okay, what is it we're going to get with this batch of money? We are going to grow to a bigger market, for instance, and we're going to get this many more customers, or we're going to move to an additional country, or things like that. You need to know exactly what it is you're going to do with the money. You need to commit that to your investors, and you need to deliver on that. And that's what's going to make your fundraising process the smoothest possible.
Thanks so much. I think, so we're at time now. So I just wanted to thank everybody so much for engaging with our webinar. I hope you enjoyed it. And the webinar, if you're interested in learning more about anything related to product management, you can visit our website at online.stanford.edu to find out more about our different offerings in PM and other topics. So thanks again, everyone.
Thanks for joining us, Donna and
Thank
I
you.
love sharing our experiences. So hopefully this was helpful.
Thank you for all your little hearts and thumbs ups
Yeah.
and claps too. I love those.